Okay, I think we can start. This is 15 minutes late, but as you know, as I told you, we're never late within the 15 minutes. So the academic quarter of an hour is we're ready to go. So thanks a lot for being here in this special panel that has a certain, I think, a significance. And I thank, of course, also the colleagues for being here, Janice Denoncourt, Clémence Garcia, because it's a special thing that we think that our colleagues, academics, need to be informed. Because the European Accounting Association, I think most of us are familiar with the European Accounting Association, decided to to set up a working group on intangibles. Because of the relevance of the topic, but the trigger has been the publication by the EFRAG. This morning we had what is going to be the chairman of the Sustainability Reporting Board, Monsieur Patrick de Cambourg, with us. So EFRAG published an important discussion paper exactly on the better information on intangibles. This happened already in August last year, but they gave basically 1 year to provide comments. Okay, so we thought the European Accounting Association, in particular the Financial Reporting Standards Committee of the European EAA, that is the jargon, EAA, decided to set up a group to respond to the discussion paper, to the propositions and of the discussion paper. So a number of colleagues, like myself, like Janice and Clémence, responded to this call for members, and then we got together and elaborated a response, an official response of the European Accounting Association Financial Reporting Standards Council to this discussion paper. So, politically speaking, I think it's a very interesting initiative by the EAA. It's not the first time, but it's the first time on this topic. So the European Accounting Association, which is the top expression of academics in Europe, probably, I hope many of us may agree on that, released an official response to the EFRAG. So we're proud that we've been with the caviars on this topic, on this field, and so we thought it was a good idea to let you know, as colleagues, that this is going on. And also I must anticipate that this group, we finished our response, and then we were ready to be disbanded, to finish our work, basically. But the European Accounting Association was maybe so happy, I don't know if that is the right term, that confirmed this working group on intangibles also for the future. So these are the members of the working group, at least at the moment. I have the honor to chair this official working group on intangibles. The vice chair is Professor Jan Martin from University of Gothenburg, Sweden. And the other members, as you can see, is Christina Dargenidou from Exeter, but clearly Christina comes from Greece. Janice Denoncourt on my right hand, and Clémence Garcia, she's French, but working at the University Gakushuin in Tokyo, and Alberto Quagli, that is an Italian colleague from the University of Genoa. This is the composition at the moment, at least. So this is the paper. The discussion paper is to find also there. So the topic is not new. Of course, we know most of this quite well, this topic. Why EFRAG wanted to enter in the arena of this debate? Because, of course, they thought that intangibles are very important. I must say that colleagues that have come for many years to this conference, I don't think they need to be convinced that this is an important topic in many respects, for external reporting, for internal management, for, for corporate finance and so on. So EFRAG decided to launch in 2018 a research agenda consultation for the future, and intangibles emerged as one of the most important topics to be addressed by EFRAG. So, research agenda consultation are those public consultations that sometimes standard setters and the like run internationally to get indications from the market. And so, clearly intangibles emerged as one of the most important topics, and therefore in 2019 they started interviews with types of, EFRAG started interviews with various types of stakeholders. In 1920 they asked the University of Ferrara to lead an academic literature review to understand what's going on in academia about reporting on intangibles. And what has emerged that not many information we have also in academic literature on the use of information on intangibles. So there are some research gaps, so to speak. And they established in 2020 an advisory panel on intangibles made up of users or financial analysts, investors, valuers, corporate valuers, and of course preparers, managers. And in 2021, in August, they finally decided to publish some proposals, some ideas on this topic that is controversial, as we know, and to launch also an international consultation. The deadline was 30th of June, but with flexibility till probably end of August. So that is the background. Discussion paper does not present a solution or the solution. It presents various possibilities. As you know, EFRAG in this respect is a bit of is an agency working basically for European Commission to stimulate IASB, International Accounting Standards Board. For financial reporting, EFRAG does not have the power to issue standards. For financial reporting, EFRAG has an important task to be proactive and stimulate change in the International Accounting Standards Board. So they're not looking for solutions, but they propose various different alternatives. They talk about intangibles, not necessarily only intangible assets, so it's a wider concept. It's not only strictly about balance sheet, but it's a sort of wider concept. And it's directly related to financial reporting and not to sustainability reporting, even though it's recognized that intangibles are an important, of course, topic also for information on sustainability. So it's something that remains to be done as well. So this is the background. Why the EFRAG identifies, when you see EFRAG on the top right, means that these are slides coming directly from EFRAG. So it's not the view of our group, of the working group. So EFRAG says that of course there are a number of issues with reporting on intangibles. So intangibles are in many cases the drivers of value, value drivers of many organizations, and they are not represented. They are represented as a cost, as you know, more than assets. And of course, one company expanding through external acquisitions would have goodwill in their balance sheet. Companies that go for an organic growth, so no external acquisitions, would not, no intangibles basically on the balance sheet. Of course, this emphasis on costs, expensing all the costs, of course, linked to intangibles, produces a reduction in profit. Before we had a very interesting paper by the colleague Feng Gu, exactly documenting this with the numbers. All the technological research-based companies in the United States tend to be likely in the loss more than other types of companies. simply because all the investments they do on intangibles are treated as costs, or profit and loss costs. And so this is of course a problem because distorts performance measures. It's an interesting thing that EFRAG says this. That is the important institutional speaking. The return on assets ratio, of course, is not correct. Revenues and expenses are not perfectly matched because, of course, we make a confusion between investments and intangibles, and we treat them as expense and intangibles, which are two different things. And finally, when you have intangibles, acquired intangibles from outside, you have amortization, but on top of that, you have also the fact that internally generated intangibles replace the previous intangibles, and they are treated as expenses. So you have the amortization of intangibles on the balance sheet, plus expenses that for intangibles that are not recognized as a new intangibles assets, but just as an expense. So a number of issues with this. And the EA working group thinks that is fair. It's a fair description of the problems we have and the distortion that this difficult and problematic recognition of intangibles in the balance sheet and the profit and loss creates. So we think that unanimously this has been, of course, we think the EFRAG is right. An example, also to give you one example of the problem, it's not only a problem of measurement, there's also a problem. Janice, you may say perhaps a few words on this GSK pharmaceutical company.
Yes, I'm one of the working group members, but I have a law background. So a lot of the research I've done have looked at this issue of underreporting or overstating intangibles from a true and fair view corporate governance perspective. And one of the things I did is I've done a couple of case studies. One involved GSK, a large pharmaceutical company. I combed through their annual report looking for their narrative disclosures, but then I looked also at the financial disclosures. And one thing that struck me from this example is that from their annual return back in 2011-2012, you can see that there's quite a change in the intangibles figure. So in this year, it actually increased considerably, which is positive. That's interesting. 30% increase. But there's nothing in the notes. There's no meaningful commentary to explain, well, how did that happen? Why is that the case? And I also think that the bigger problem could have been if that had been a negative. If it had gone down 30%, everybody would be wanting to know, well, why is that the case? How come it has decreased? Yet the annual report, which is where most investors go, initially at least, to look for their information, is not capturing that dialogue with the shareholders, with the stakeholders, and the notes don't really elaborate. And this annual report was more than 300 pages. So this is one of also the issues, I think, with integrated reporting is to find intangibles information. It's not like in one place. There's not one subheading. You really do have to navigate through it and know what you want to find and look for it. So from a comparability perspective, creates a lot of issues in terms of stewardship and directors' oversight of their IP rights.
So even legal scholars affirm that. So I think it's an important element to consider. So it's not only a problem of measurement then, but it's also a problem with information. And in this respect, the EFRAG discussion paper we think is right. So the second question was posed by EFRAG discussion paper. There are 9 questions. So the second question is which way to go, and of course I leave the floor to Clémence to introduce that. They proposed 3 different.
Yeah, thank you. So let me remind you that the slides with EFRAG are those from the discussion paper, and this is not the view of the committee.
Of course.
So this discussion paper proposed 3 ways to improve information about intangible assets. The first way is to improve or to recognize and measure more elements on the balance sheet or on primary financial statements. The second aspect is to increase disclosure, to increase the information related to specific intangible assets in the notes or in the management report, including some assets that may not be recognized on the primary financial statements. And the third approach is to increase information on future-oriented expenses and risks and opportunity factors, which means to increase information on the intangible expenses or intangible investments that are not recognized on the balance sheet. Our view about these three ways, or the summary of the view of the committee, is that working first on a better set of disclosure on intangible assets could be a good way in the short term, at least in the short term. This would have a positive impact on the quality of assessment of companies, and especially on the assessment of risks and cash flows. As far as the primary financial statements are concerned, we acknowledge the pros and cons of recognition, non-recognition, but the working group decided that maybe it's better to keep conservatism, so to reduce or not to increase the scope of intangible investments to be recognized on the balance sheet. So instead of increasing the scope of recognition, we propose to provide increased information on intangible investments, on intangible elements that may not be on primary statements, but that can be interesting to investors and other stakeholders, which is, we think, easier to implement in the short term, and which is likely to benefit information users of financial statements. So this was the first question of EFRAG. So let me, sorry. The third question is about recognition. I just mentioned that the working group was in favor of not enlarging too much the scope of intangibles recognized in primary financial statements, and this question is a little more detailed on this particular topic. The question from EFRAG is there a need for recognizing intangible assets? That's very broad, with several proposals. So if you want, I suggest that you have a look in detail in the discussion paper. But if I just explain in a nutshell what the EFRAG proposed or raised as issues. The first issue is which kind of intangible investments should be recognized. And the EFRAG says those meeting the definition of an asset, because as Stefano mentioned, the EFRAG does not have the power to create new accounting standards. So to some extent, we have to comply with IFRS. The second question is under which circumstances should such intangibles be recognized? And there's a second slide about that, so let me move to the second slide after. And the third question is which measurement basis or basis should be considered in case of recognition. For the recognition, the EFRAG suggested several criteria and several timings of recognition that are summarized on this slide. One of the proposal would be to capitalize all costs related with intangibles. Another proposal is to recognize the cost as an expense, and another proposal is to capitalize the cost when certain conditions are met. So I guess that you think of the current standard of IAS 38, so you capitalize development costs when some circumstances are met, and EFRAG proposed slightly different methods of capitalization, including one in which cost would be recognized in OCI and then reversed to the balance sheet, or cost would be capitalized and impaired, etc. So there are several variations. The view of the working group is that we after reviewing the literature on that topic, we think that there are more advantages to conservatism than disadvantages, at least in the current state of financial reporting. If I just raise the pros and cons, for the advantages, which means non-recognition of intangible investments, conservatism reduces management's ability to manipulate earnings, and so it reduces information asymmetry between management and investors. The second advantage is that it reduces uncertainty in primary financial statements because there is no margin for earnings management. And the main disadvantage is, as I guess most of you know, it leads to poor matching between expenditure and the revenue created by investments in intangible assets. That's an old issue, and unfortunately, we have not found the right answer to. About the most recent research on the capitalization of intangible costs and on the value relevance of such information, there is a stream of literature, some literature that shows that there's an increased focus on EBITDA, while depreciation and amortization tend not to be very relevant to investors. For the capitalization of intangible investments, it means that, for example, capitalizing costs on the balance sheet and then amortizing these costs over several years would not be very relevant to investors. Okay, and the second aspect is that increasing disclosure instead of amending IAS 38 would allow to provide information that's relevant to investors without conflicting with the existing standards. Okay.
I could just add, from a legal perspective, having expertise in intellectual property rights, that some of the research undertaken in the IP rights institutions is showing that investors are mainly interested in patents and the quality of the management team, which just, one company spending £1 million on patents and company X spending £1 million on patents doesn't actually tell you anything about the quality of the patent or the invention, how it's drafted, how strong it is, which jurisdiction it stands up in. So that would be one of the disadvantages that you can address through additional disclosure, of material IP rights that are relevant to your business model. So just having them at cost, because it costs the same to register, costs relatively the same amounts to consult patent attorneys, to pay your research scientists. So those costs are all fairly static, so they're not differentiating the companies in terms of the strength or quality of their IP. But there are wider intangibles, not just IP, of course.
Want to go to finish question 4?
Yes, thank you, Janice. Okay, so question 4 is about the possible measurement basis in case of recognition. But as the committee or the working group said that we would not enlarge recognition, in fact, the measurement issues arise when disclosing new elements in the notes. For example, if there are some intangible assets that are not disclosed on the balance sheet but that need to be explained in the notes, you need to provide some measurements for these items. So the disclosure about intangible assets could be the subject of measurement issues. About the proposal to increase detail and prominence of intangible investments on the income statement, there is another question about FOEX that we will explain a little later, so I leave it to Stefano later. And one more interesting point that we discussed in the committee is that for some types of intangible assets, there is a secondary market, so some market value of, for example, patents in the US. And this market value could be used to provide interesting information to shareholders, to investors.
Yes, because we don't have, an IP rights market like a share market. So there have been proposals in the EU tenders to try and establish that. What's happened in the US is they have more auctions of IP portfolios from time to time, and it's those market transactions that are now being recorded, tracked, so that we do have the arm's length transaction data in sufficient quantity, I think, and it's always increasing now, particularly over the last decade in the US. So that could help overcome one of the recognition principles in terms of moving from cost to fair value.
Okay, so question number 5. We still have about 10-15 minutes, so I think we need to.
Yes, well, question number 5 was, intangibles is this huge blob, and Clemence has done research to show how big that intangibles unknowable blob is. And so the question is whether or not providing information in relation to specific intangibles would be helpful. I unbundle that concept because it's very much an accounting term. In the legal profession and other professions, people don't necessarily understand intangibles the same way. My area is IP rights, which is a subset. But there are certain types of intangibles that have more certain characteristics than others. So perhaps unbundling them could be quite useful in this regard. Now, the intangibles that are probably the most material for non-financial disclosure should relate to the entity's business model. So you get that concept of materiality, because a company might have, a huge portfolio of patents, maybe 2,000, 3,000, 4,000 patents. Now, you're not going to disclose all of them, but you could disclose the magnitude of those patents. There may be some core patent families that may be of interest. And certain patents have other functions. They can be basically creating patent thickets around the core technology to protect it. So not all patents have the same value. And they're public documents in any event anyway, because one of the principles with patent law is that when you file it, you register it, it becomes public information. But its value lies in the fact that it's a very potentially long asset, and it can help underpin that corporate value. So the type of information could be quantitative in the sense of the magnitude of your portfolio, because I think if you're spending money on renewing patents every year for 5,000 patents, that's an interesting decision to be making. You think it's worthwhile to maintain those patents to support your business model. On the other hand, qualitative information could be quite useful in that it points a direction forward, because if you start filing patents, it tells a story about the future aspirations of the company in terms of its technology. And the patent system is well established. It has databases, you can search them. Investors do search them and make very considered decisions. And that can be an individual investor, but it could be a pension fund as well. So a lot of the data is there. So therefore, information relating to specific intangibles could be, really useful. So there we go.
This is what EFRAG is saying.
Yeah, this is what EFRAG is saying.
This is what we say.
This is what we say. We think that investors are interested in more information and disclosures about intangibles. And a lot of the more recent studies into what investor information is wanted, desired, useful, confirms that in the main. So there's consensus that, the financial statements of themselves don't provide the full picture that investors are looking for. But of course, we're not only focused on investors, because in the corporate world, in the company world, we have these issues that follow COVID that are related to sustainability, about shareholder primacy, external stakeholders in our company's legislation. And one of the things is that the current corporate governance legislation regulation doesn't provide any detailed guidance at all on intangibles. In fact, in the UK, the Companies Act is the longest piece of legislation that exists, and it doesn't mention intangibles at all. So, we're out of sync in a way with what's happening in business. So we do think that additional use information is helpful, but really we need some kind of guidance or common format, and maybe the wiki framework is a potential for that. And I mentioned about my GSK case study, and what happened there and what happens with most companies is, particularly large listed companies, is their annual reports are already very lengthy, maybe 300, 400 pages. So increasing the volume is not necessarily desirable, but making the statements more relevant, more material is desirable. And the intangibles information in IP rights tends to be at the very end, and it might even be under the competition, so to speak, how we offset our competition through our IP monopolies. So, Stefano, do you want to mention about the wiki?
No, I'm just saying that basically if the group was completely in agreement to expand the information on specific intangibles, disclosure is clearly the way ahead. However, we also need the reference to some standards or some guidance. And nowadays, one of the few would be wiki, of course. And that's why we thought that it was important to include a reference to wiki in this respect. Do you want to say something also on fair value on some intangibles? Perhaps you want to. Or maybe you want to move to.
I think actually I would like Clémence to speak about her research on the variety and the wide range of intangibles, which requires a bit of editing, as when you're disclosing, what do you include, what do you exclude?
Yes, so just in a few words, I did a survey of the accounting practices of the pharma companies from the time that they adopted IFRS, or a little earlier for most of the cases, and I found really great diversity of terms used to categorize intangible assets, which is, I think, very difficult to understand for investors and for the people who just want to know which kind of intangibles these pharmaceutical companies hold, cannot really judge the underlying assets in the disclosure that is provided. And internationally, there's also great diversity, because I think that in some countries, the professional organization propose some guidelines, or there is a legal framework that tends to harmonize the terminology used. But in Europe and also in multinational companies' disclosure, there's a lot of different variations of the same thing, which makes it difficult to trace in financial statements.
Yeah, so there's clearly a need for some kind of more universal taxonomy. With respect to IP rights and, say, patents or trademarks or copyright, in a sense that does exist, because you have the World Trade Organization, who has delegated authority to the World Intellectual Property Office to establish a treaty that all the WTO member states have to adhere to. And so they tend to use those common descriptions. But it's come from quite, a global perspective. And it is limited to just the IP rights situation. And of course, the term is much broader.
Janice, do you want to mention this important legal reference to the Companies Act? I think it's also a bit fair. That's it. Because I think it's important, because we always look into accounting, forgetting that accounting is part of the legal system, which is also an important element. So please, from a UK perspective, I think it's an interesting thing.
Yes, I mean, we all have companies' legislations that, are not identical, but they're broadly similar, particularly as between the UK and the EU in many ways. And in the UK Companies Act, there is a duty for companies to keep records of the underlying documents to be able to prepare the accounts. And that's a legal duty. You have to keep adequate accounting records. They have to be able to show and explain the company's transactions. They have to be able to disclose with reasonable accuracy at any time and the financial position of the company at that time. And they have to enable directors to ensure that the accounts required to be prepared comply with their directors' duties to promote, largely in the UK, the success of the company. Now, if you're going to require eventually, if there's an accounting standard that suggests more narrative disclosure, we need similarly the underlying documents and records to enable the company's management and directors to draw on that information. And it should be a duty, a legal duty. So from a legal perspective, it makes sense to include an equivalent legal requirement to keep intangibles records. Now, obviously, the scope of what those records would be at the discretion of the company and the directors, as long as they can meet those legal requirements. So if you are buying and selling an intangible asset or an IP portfolio, you would need to keep records to enable you to then effectively value the assets for the purpose of the transaction, so it stands up to scrutiny from your external stakeholders and shareholders, for example. But that doesn't exist at the moment. So that could be a potential law reform to complement any changes to the accounting procedures.
Just a final comment, Janice, on this point on true and fair view, because I think after we can move to Forex.
Yes, because the whole accounting system feeds into the corporate governance layer, which requires directors to have oversight of all the assets of the company. So it doesn't necessarily distinguish between tangible, intangible assets, but the legal requirement means that the accounts and the narrative non-financial information disclosures should provide a true and fair view. And if, particularly in my view, and probably in some of your opinions, if the accounts become less relevant because they're not capturing intangibles, because they're off balance sheet, because they're not being disclosed, there is an argument that that true and fair view cannot be ascertained the way it should be or has been in the past, because we do have companies now where the value of their intangible assets outstrips by considerable amount the value of their tangibles. So we have to capture that information. That's why we've got people like the EAA, EFRAG in the UK. They've set up, because of Brexit, of course, a new UK endorsement board, and that board will have power to set their adopt accounting standards. So unlike EFRAG, which is more advisory, the new UK endorsement board will have power. So, and they have a special project on intangibles.
Okay.
Yes, they've just announced that. They've just finished one on insurance contracts. But the timing is very interesting that so many of our accounting institutions and standard setters are focusing on this issue, because I think they can see where not addressing it could become, could affect trust in the market, could potentially lead to inaccurate valuations, statements, and that could create financial instability, which is not really what we need any more of at the moment.
Okay, I think we need to close down in a couple of minutes, because otherwise there will be already the plenary people coming along. As a response of the European Accounting Association to the discussion paper by EFRAG on intangibles, we thought that the question number 6, the proposal to have a more clear future-oriented expenses, so segregate, dividing up expenses in the profit and loss between those that are more future-oriented and clearly linked to intangibles. We thought that it is an interesting proposal. We thought that is something to be pursued by EFRAG and of course possibly by IASB later on. Of course we remind you that we talk about financial reporting here. And so this is the proposal, basically distinguishing future-oriented expenses. So would it be useful to understand which kind of investments the company is doing, even though from accounting perspective, they are treated as a cost. Like training expenses, of course, they are more future-oriented. And also they propose a bit of a presentation. And we thought, as I said, generally, an interesting proposal. This comes also as an elaboration from the Financial Reporting Council. Financial Reporting Council, the UK one, the body was already thinking about this, and I think EFRAG made a good job to explore this and to make it more developed. With, of course, there are some advantages and some disadvantages. And as I said, we think that the FOEX, future-oriented expenses, FOEX, is a source of intangible assets, and at least to get to know in the notes, a division between those that are FOEX, those that are simple, ordinary expenses in a sense, it would be already a good starting point to start addressing this delicate issue, complex issues in financial reporting. So clearly though, we don't have to forget that we also have to face a number of problems like classification of the expenditures, which expenditure are future oriented, how do we separate out certain expenditures from other expenditure, really the measurement, the calculation is not always, and of course some issues also have been raised by the working group about the usefulness of this for investors. We are not 100% sure that is a tentative new thing. And so clearly that might still remain to be seen, but potentially, and of course considering though the classification, the separation, usefulness problems and issues, though we thought that this is a useful approach. So I think our responses will be online at the EFRAG, so that no problem to find it. So we don't want to enter. And of course, the final maybe on this point, and to draw to a close, is about the qualitative characteristics of this type of FOEX, of future-oriented expenses. The level of granularity, for instance, how granular you want to be, when, where the notes, and at which level, the group, entity level, segment reporting. So we have a number of technical issues, as you can see, that may make an impact on the qualitative characteristics of information. I wonder if we want to say a couple of words on information on risk and opportunities linked to intangibles. Maybe a few words.
Yeah, so from a legal perspective, it's important that you disclose any risks that you have identified that the business could face, so that you can take steps to address them, to offset any expenses. And of course, we know that lawyers provide letters of comfort to businesses to say, okay, the company's accounts identify this problem and they've offset it with this money. But we think that some of the intangible risks are probably not as disclosed as best as they could. So typically, from an intellectual property perspective, litigation risk is disclosed. If there is litigation afoot, what the response would be to that. But the other side of the coin is providing this additional information creates risks for the company in terms of the accuracy of the disclosure, because it does have to meet a standard in the sense that it has to be verifiable. You can't mislead, make statements that are misleading, and that therefore should be verified by usually a legal team working with the auditors. So more disclosure in general will create additional regulatory risk of not complying with the corporate governance codes, the company's legislation, or in the US with some of the SEC disclosure regulations. But I think we probably would agree that that's outweighed by the usefulness of the information. So there has been studies to show that, you know, the cost of doing additional disclosure is a factor, and there has been some kickback from companies, particularly in the US, where they are doing, you know, greater disclosure already, that they're saying, well, it has, you know, impacted the number of companies listing, for example. So I think we do have to be careful about the level and the materiality of the information that is disclosed.
Okay, we don't have the time to go through this. Mario Bella, the chairman of Wiki, is here, so just to say that we quoted as an example of disclosures on intangibles some of the Wiki industry KPIs. Of course, they're not the only example, but probably it's the most advanced. There are other two questions. If you allow me, Janice and Clemence, I'm going to deal them very quickly. One is terminology. Do you think it's important to have a common terminology? Clemence just mentioned the study she just carried out, and we have 145 different types of terminology used in the pharma industry, just to call it intangible assets. So I think clearly the answer is yes, we need a common terminology. How to reach there, though, that is the problem. But this morning we had a quite good sentiment that there might be also, in this respect, some collaboration. Another one is the usual topic of commercially sensitive information. Intangibles are too commercially sensitive. No information on intangibles, they're too risky to give information. Once again, this is a controversial aspect, but we think that there's also legal, as Janice pointed out very clearly, there are legal constraints that you need to provide information to your shareholders and to the market in general. It's not just about secrets. That is also
it's not about disclosing what the trade secret is, but you have the new EU Trade Secrets Directive that came on board a couple of years ago. And what companies have to do is they have to show what steps they take to protect their confidential information, that they have an oversight system in place, somebody responsible. They might have an internal register. So it doesn't mean that we're disclosing our trade secrets to the world, more that we're managing them and have oversight, and we're tracking what our trade secrets are and what is just normal information. That's everyday business. So that's a legal requirement now under the EU Trade Secrets Agreement if you want to enforce that confidential information or trade secret.
And finally, that's the trade secrets aspect. And there's a legal risk you mentioned about this. And finally, the placement of information intangibles. The EFRAG proposes, management reporting, incidentally, and we tend to agree on that. The management report, management commentary, management discussion, analysis, as you want to call it, is the right thing. And of course, digitization will also be solved partially the problem. Digitization of information, because it will be linked through maybe XBRL, and so everything will be much easier and accessible. So, okay, this is the work we carried out with the EAA, the newly established European Accounting Association working group on intangibles. Of course, we remain at your disposal, so if you have any information on this, and let me thank you, all of you, for being here. Thank you very much.